You're listening to Ask the Expert on Sprott Money News.
Well, greetings once again from Sprott Money News and SprottMoney.com. It is the month of August 2018, and this is your Ask the Expert segment. I'm your host, Craig Hemke, and joining us this month is Mickey Fulp. Mickey Fulp is known as the Mercenary Geologist, as he has a 35-year track record of experience as an exploration geologist and an analyst. You can find his work at his website, mercenarygeologist.com. If you go there, you can register for his completely free newsletter, where he keeps all of the newsletter readers up to date on all of his current thoughts. You can also follow him on Twitter as well. It is a great service that Mickey offers, and it's great to have him visit us for Ask the Expert. So, Mickey, thanks for taking some time this month.
Thanks a lot, Craig. Good to talk to you again. We do other podcasts on other venues, but I welcome the opportunity to talk to some Sprott clients and other interested people.
And before we begin, just a reminder, these Ask the Expert and weekly wrap-up segments are always brought to you by the good folks at Sprott Money. You're going to find the best deals there for physical bullion. You can also find great deals for storing bullion. So please keep Sprott Money in mind. Anytime you're looking to add to your stack, you can find us at SprottMoney.com, or of course call us at 888-861-0775. Mickey, you're right. These are always fun segments. We put out your name as the expert a few weeks back, put it on the internet. We've been collecting questions from Sprott Money customers and just regular folks on the internet. And because you are so wildly popular, boy, I tell you what, I had a lengthy list. I had to work to kind of cull it down and combine questions, and I've narrowed it down to 7. So if you are ready, my friend, can I hit you with question number 1?
You may. 7 is my lucky number.
There you go. Perfect. All right. Well, then question number 1, Mickey, and I think you can speak to this, certainly based on your experience. A lot of times you see press releases, other information from mining companies that talks about, new grades and ore bodies that they found. And they always express things in terms of grams per ton. The first question is, in your mind, what is considered to be a good drilling result for gold or silver when it's expressed as grams per ton?
Well, it needs to be put into context as to whether the company, and it's probably not a mining company, it's probably an exploration company to begin with. But what's the goal there? What's the geometric configuration of the deposit? So for an open pitable deposit, you want to see probably a gram per ton over wide thicknesses. That would attract my attention. Anything over a gram per ton. For underground mining situation, future mining situation, a rule of thumb would be, depending on if it is bulk mineable underground or narrow mining underground, from 4 grams per ton upwards for a narrow mining situation, 6 or 7 grams per ton.
And is that for both gold and silver, Mickey?
Oh, that's only for gold.
Okay.
Yeah, so I'm not a silver guy, and I think I'll pass on that question of silver, because silver is very complicated because it never occurs by itself.
Right.
So you'll see silver assays posted when what they're really talking about is a lead zinc ore body or a copper ore body or even a gold ore body that has a significant amount of grade, or sometimes the most of the grade is in a silver equivalent. So silver's fairly convoluted, and I'll choose to pass on that.
Gotcha. All right, then let's move on to question number 2. And this has to do with rare earths. The Trump administration is doing all kinds of things with tariffs against China, and they're talking about ending the importation of rare earth metals maybe as soon as next year. So the question deals with your opinion. Will the North American rare earth sector come back to life? And additionally, what do you think specifically of uranium?
Okay, first question would be rare earths in North America, not from a mining situation. Certainly there They are trying with new ownership to reopen Mountain Pass. That's a light rare earth deposit. Whether it can be competitive, now it does have foreign ownership now, is equivocal at this point. On the heavy rare earth end, which are the elements of real concern, the so-called electric metal portion, battery metal portion of the rare earth sector, we don't have the deposits that can be developed or can be competitive. That said, the idea that we can process mine waste, specifically monazite tails, to produce both light and heavy rare earths is a viable option with technology in place, but yet to be put into production. So it's a bit of an equivocal answer, but in summary, the gist of it is that from a mining situation, probably not. From a processing and technology look, possibly at this point. Uranium, it's coming. It's got a ways to go. The price has gone from $18 to over $26 since, if memory serves, November of 2016. But we need $40 uranium. Certainly with Trump's initiatives, that will lead to, once again, a viable uranium mining industry. So ways off, though.
Got it. Well, that's certainly a good price level to keep an eye on. That's for sure. I appreciate that. Question number 3 is one that, I've been doing these Ask the Expert things now for 3 years, and I haven't had this question before, so that's kind of fun. The submitter said he is a prospector. How about that? Up in the Yukon and in British Columbia. And
I know who he is.
Oh, well, there you go. There's just one guy up there, apparently. He's walking around. He's got his pack on. Anyway, he wants to know which metals you think he should focus on up there.
I would be focusing on gold, especially where he's operating. And my advice to him, or the way I would look at it, and I have been a prospector and a geologist in the field in careers past, significant amount of time prospecting. I would encourage him to stay out of British Columbia and focus on the Yukon. There are many geopolitical reasons not to like the future of British Columbia as a mining venue.
Interesting. Do you want to expand on a couple of things you're looking at there, just for the listeners? Because I'm sure that a lot of folks probably have some British Columbia-based mining shares in their portfolio.
Yeah, and I own none, zero. Yeah. Number one, you have a socialistic government, a National Democratic Party, which is basically Western Canada's Socialist Party, and the Green Party, which we're all familiar with, both in the U.S. and Canada. So an anti-development socialistic government, ongoing native land issues that will always rear their ugly heads, remoteness and infrastructure difficulties, especially in the place called the Golden Triangle. So those are 3 of the reasons that I would tend to stay out of British Columbia at this point.
Yeah, I'd say it's perspective like that brings additional value to that newsletter you have. And again, it's free newsletter. You just visit mercenarygeologist.com and sign up. Mickey, we're almost at the halfway point. We're going to move on to question number 4, and we're going to start dealing with some of the mining shares. This is just kind of a broad question, so I'll just lay the whole thing out there for you. How would you go about building a diversified junior mining portfolio?
Number one, you have to have a significant amount of capital to start with, and I would say, from my point of view, I would want to start with something on the order of at least $50,000. This should be discretionary income. This is gambling, although we are able to skew the odds in our favor. And I would tend to look to buy initially about 10 companies and put, say, $5 to $10,000, let's say, in those 10 companies. So start with $50,000 to $100,000, put it into 5 to 10 companies. My modus operandi is I'm looking for companies that can double in 12 months or less. So you want to buy them when they're low and sell them when they're at their 52-week highs. There are very few companies on the Toronto Venture Exchange that do not have at least a double in every 52-week running 52-week period. So from that point of view, look for stocks that are unloved, unknown, unwanted, and most importantly, undervalued, and buy them then. Sell half when it doubles and go and do it again. You preserved your capital. If you do that 4 times, you've got 4 times the value on paper that you did when you started. Brilliantly
simple. And if there was ever a time when stocks on the Toronto Venture Exchange were unloved, unwanted, and underappreciated. Whoa. Okay, let's move on to question 5, which is a collection of some specific names that people sent in and wanted to get your opinion on. So I'll just take them one by one. The first one is something called Coro Mining. You know anything about that one?
I do know Coro Mining, a very interesting project in northern Chile, a copper oxide play that has been compared geologically with Mantos Blancos, which is an operating mine in that part of the world. I took a look at Coro 2 or 3 weeks ago. Very impressed with the project. The problem I have with the company is the radical share dilution that they have undergone, and that looks like punishment for legacy shareholders. If memory serves, something well over 400 million shares outstanding. So it looks to me like it's a rollback waiting to happen, or I would hope it's a rollback waiting to happen with a catalyst. So I like the deposit. The management, who I don't know personally, but they do have strong resumes, but the share structure is an impediment to me.
Got it. All right, the next one is something called Nordic Gold Corp.
I'm going to pass on that. That came across my desk sometime in the last few days, but I have not taken a look at it.
All right. And then the third one is one I know Eric Sprott speaks of quite often, called Garibaldi Resources.
Yeah, I'm not a fan of Garibaldi Resources. Once again, quite a diluted share structure. They had last year it went exponential and to some degree went parabolic on a couple of really hot drill holes in the Yukon, a nickel play. But from what I can tell, those are re-drills of previous intercepts drilled by Silver Standard. And if memory serves, sometime in the late 60s or early 70s. The prospect is being promoted on a geophysical target at depth, and is something that I certainly would stay away from.
Fair enough. All right, then let's move on to question number 6. And this is kind of a different sector within mining. The question is, are there any junior copper or base metal mining companies that have your interest?
Well, certainly on the copper end, and that would be Trilogy Metals, and I am intimately involved with Trilogy Metals. I cover them on my website. They are a sponsor of my website, and I own a significant position. So I'm conflicted. I have a financial bias here. I'm talking my own book, or however you want to say it. But Trilogy Metals is an advanced exploration/development play in Northwest Alaska, with arguably the 2 best giant high-grade undeveloped copper deposits in the world at Bornite and Arctic. They are progressing very rapidly on these. South 32 is earning a 50% option. I would suggest that people take a look at it now, but I will tell you that we picked this stock at 66 cents in May of 2017, and the last time I looked at share price, and these are all U.S. dollars because it's listed in New York, the main listing. It was at $1.85, so it's had quite a run. But I think there is still significant amount of upside. And one of the things you're playing here is with South 32 to exercise their option and own 50% of it. And I think the deadline that is January of 2020. But it looks like it's takeout target to me by South 32, much as they just did with Arizona Mining for an all-cash takeover of $1.3 billion.
That's steep. You have any zinc plays or anything like that, Mickey?
Well, I did participate in a zinc play called Hannon Metals. I covered that company about a year and a half ago. It has not performed very well because the zinc explorers never really made a lot of inroads, with a couple of exceptions. Price of zinc now is dropped from $1.61 to $1.11. I continue to hold Hannon Metals. I like the company. I don't like the valuation. Perhaps it's a buying opportunity at about 18 cents, which is less than my cost basis. But they do have significant deposit in Ireland with lots of exploration potential.
All right. I think it'd be fun to go over there, do a little due diligence on them, Mickey. We can knock back a couple of Guinnesses and all that kind of stuff. All right, my friend, final question.
I would agree with that take for sure.
All right, then final question for this month. And this gets kind of to maybe some of the larger senior companies. You know, many of them reported lousy earnings last quarter, and it doesn't seem like if the price goes up, they make any more money than if the price goes down. And I think a lot of that is due to their input costs. You know, if the price of the metal is rising, then maybe all of their other input costs are rising, and their margins never widen out, and they never get anywhere from a earnings per share standpoint. So, I guess to boil that down to a question, how do you discern, or anybody else, if a company can actually profit from wider margins as price increases?
Well, number one, that has been the bane of mining companies since the metals markets turned in 2003 to arguably the beginning of 2013, and we had a pretty deep bear market, came out of it, went back into it. Mining is not my modus operandi. I don't like mining companies. In fact, I just posted a piece last Monday or 2 days ago, I guess, why I don't own mining companies. And mining is a really tough business. And your point's very well taken. As metals prices rise, as oil prices rise, your input costs rise at least equally as fast. So energy and labor are the largest cost in most mining operations. You just got to look at the pre-feasibility studies, the feasibility studies with your red pen and start picking out fatal flaws. I do that commonly. My kind of sweet spot in the industry is the advanced explorers who are working towards those sorts of things, and I generally look for an exit strategy on those companies that will get me out before they become mining companies.
Understood. Yeah, your track record of success speaks for itself, Mickey. And again, I want to encourage everybody. You can go to mercenarygeologist.com, sign up for Mickey's totally free newsletter. I get it in my inbox, And I was joking with Mickey once and said, most things that are free don't have any value, but his newsletter is invaluable. It's a complete opposite. So I encourage everybody to check it out. Mickey, thank you so much for spending some time here at Sprott Money Ask the Expert. I think it's been very valuable for everybody that's listening, and hopefully we can do this again sometime soon.
Well, thanks for the kind words and thanks for the opportunity, Craig, and I look forward to talking to you in the future.
And from all of us here at Sprott Money News and SprottMoney.com, thank you for listening. Talk to you again next month.